This is On The Charts with Nick Radge, your Australian stock market update, highlighting stocks on the move so that you can invest with confidence and success.
The information in this podcast is general advice only and does not take into account your personal situation. Please consider if it is appropriate to you and consult a licensed professional before making any investment decisions. The information provided is believed to be accurate at the time of recording.
Welcome to the On The Charts podcast, episode 188 for Thursday, 4th of May 2017. US shares closed slightly lower last night, although small caps represented by the Russell 2000 continued to weaken further. They fell 0.6% last night after a 1% fall the prior night. As expected, the Fed left rates unchanged but reiterated that two more rate increases were down for the balance of the year, potentially having one next month. This strengthened the US dollar and pushed the Aussie dollar down below 74.50. Gold slumped $20. Iron ore and copper continued to fall, as did crude oil. In Australia today, we saw some follow-through selling early, even though NAB delivered upbeat results. Iron ore continued to sink in the Asian session, falling another 7%, and that's the daily maximum limit, and that obviously dragged the likes of BHP, Rio and Fortescue lower. ANZ continued lower, losing another 1.6%. It was off its lows though. Commonwealth Bank and Westpac followed suit, and only NAB retained a green bid, although off its early highs. Mesoblast, which has been one of our top performers in the small cap growth portfolio this year, reversed course today and slipped 14%. Our systems are on standby to exit the position if required, and corporate travel surged 9% to record highs after an investor presentation today and an upgrade in its guidance. In late news out, the RBA governor has warned that household wage growth will need to catch up to housing inflation if the Australian economy is to become more resilient to the problems caused by the burgeoning household debt. The big problem the RBA has identified is the fragile nature of household balance sheets and what would happen when interest rates start to head higher. At the close today, the broader market was 0.3% lower, albeit well off its lows. It was weighed down by the financials, materials and the telcos. Information technology sector posted a 1.2% gains, and utilities also added 1.4%. Small caps were down 0.1%. Suncorp bucked the weakness, adding just under 1% today and probed into new yearly high ground. The share price has been making a choppy recovery from the lows seen in early 2016. The company has a maximum loss exposure to Cyclone Debbie of $250 million, and the financial impact is expected to be quite nil as it's protected with its reinsurance cover. Now, technically, the stock is moving higher and should continue to do so, but we're viewing this strength as a corrective bounce and not a sustainable new trend higher. In the last quarter of last year, prices surged from $11 to $14, and after some consolidation, it's now moving higher towards our expected target, which is pushed through resistance at $14 and on towards $15, maybe even $15.50 before a larger decline takes shape. Certainly some good upward movement here to hedge against other financials, at least in the short term. And Estia Health is a company we've discussed previously on this podcast and it continues to impress. Today it added just over 3% on continued speculation of potential takeover target by Sentinel Health Trust. A quick glance at the chart shows a potent downtrend which has seen its price slash from a high of $7.50 in late 2015 to recent lows nearer $2. That low point came on significant capitulation and culminated in significant buyer demand stepping in, and over the last 6 months a basing formation has been taking shape with the upper boundary at 340 being tested today and within striking distance of the base breaking out. And under normal circumstances, this type of accumulation with strong background buying leads to a new potential trend, but with a takeover by Sentinel Health, anything can really happen. The immediate upside target, based on the pure technicals, is $4.50, and that is quite nice versus today's close of around the 330 mark. My name is Nick Radge, and I look forward to seeing you on the charts tomorrow.
On The Charts with Nick Radge, brought to you by The Chartist. Join Nick and the team at Noosapalooza Trading and Investment Conference, 20th and 21st of July in beautiful Noosa, Queensland. Visit thechartist.com.au and click on Noosapalooza in the menu for details.